It's time for Ask the Expert on News Talk 1340 KWLM.
And we have two experts in studio today. We're very pleased to be welcomed by members of United FCS, Jan DeVries. Jan, you've been in a few times before. Good to see you again.
Yeah, thank you, Bill.
And you brought a relatively, I guess, a new member of your staff with you in Karissa, Fettig. And Karissa, nice to meet you this morning as well.
Nice to meet you.
And you and Jan work together, at least in one aspect of the business, and that's some of the home loans that are handled through United FCS.
Correct, yep.
So tell us a little bit about your background, Karissa. I know you're pointing at Jan, but I want to find out a little bit about you first. Where you went to school, maybe your family, where you're from, and that type of thing.
Sure. I grew up just north of Cosmos and graduated from ACGC, went to college at Marshall, and actually did a stint out in western North Dakota as a loan officer out there with Farm Credit, and about 2 years ago came back here and was lucky enough to get on with Farm Credit, and now just recently started working with the home loans as well.
Now, you were saying your husband is a nephew of Dave Fettig, I believe?
Yep.
And I know Dave had a brother, too, about the same age. I'm trying to think of his name, but I remember they both played at Cosmos when I played basketball for Belgrade, and I remember we played them one year. So
okay.
Back in the early 70s or around 1970, right in that area, early 70s. So
yeah, Kurt and Carla live just east of Wilmer, so they're still in the area.
Oh, yeah, well, that's neat. You mentioned western North Dakota. A lot of people are interested in that because, of course, of the big oil explosion that occurred out there. And I think a lot of, people were working out there, even from Minnesota. And there were a number of, jobs that were created and even businesses that prospered from kind of the boom out there with all... I think of Litchfield Building Center, all the buildings they put together and hauled out there. But, I mean, all sorts of different offshoots based on, the oil patch. What was it like out there now? Because it seems like we've been hearing it slowed down quite a bit.
Yeah, we came back, like I said, 2 years ago. I think it was starting to slow down at that time. But we were in the south of the interstate, so where a lot of more of the activity was west and north of the interstate.
Right,
so.
Kind of the Williston and up in that general area up there. Yeah, and it's, it's interesting, Jan, too, the boom and the bust. And I mean, we've seen it, in a lot of different aspects. I think Wright County at one time was the fastest growing. And yet then, years later when we had the housing situation, I think they had the most foreclosures, too. So, I mean, it's one of those things, kind of what goes up comes down, too, from time to time.
Yeah, you're absolutely right, Bill. If anything cycles more than the home industry, I'm not sure what it is. But we've seen kind of a lull recently, and now we see it picking up. Matter of fact, I was talking to a friend of mine in the metro area. He knows a realtor who listed 5 homes in one day, and the next day he had 4 of them sold. So the home lending business is picking up.
That's what I've been hearing, especially, and there's a lot of pent-up demand. And, you've been in this business a while. Have you seen, I remember as a kid, it seemed like interest rates were very stable, both what you could receive if you had savings. There maybe weren't as many people. There wasn't a 401k plan. There were pension plans at some of the larger employers, but really the employee had very little to do with that. The employer pretty much handled it. And it seemed like, there was your savings bonds and a savings account, and maybe you could buy like municipal bonds and things like that. But everything was kind of stable for many years, both, in the interest that was being charged by the lending, facility and then what they were paying. It's been in kind of a similar scenario here for quite a few years. These interest rates have been, now they're talking, the Fed again is saying they're probably not going to do anything with the interest rates. So,
yeah, I think the economy is still fragile enough that we want to make sure that interest rates stay in line, that we don't get into an inflationary period or anything like that. The Fed will establish the short-term rates, but of course the mortgage market is more influenced by supply and demand. And right now, I think we're probably in a fairly stable interest rate pattern for some time yet.
Are most of the home mortgages now, are they the 30-year fixed? Is that kind of the most common, or can you expand on that a little bit more?
Yeah, I think in general in the home mortgage market, the 30-year fixed is primarily the one most people go with. There have been studies done that show that the average 30-year mortgage is probably only on the books for maybe 10 to 15 years. They're either paying them off or they're selling and buying something different. People are being relocated. But I think they generally get into the 30-year mortgage because that payment is the most affordable, of course.
Mm-hmm. And it's kind of, it's one of those things, it's a fixed thing you can kind of focus on too and budget for what those payments are going to be. So
well, exactly, and most lenders do not carry a prepayment penalty, so it's nice to have a fixed interest rate, but with the option to pay extra, and that's a way of paying your loan off faster, of course.
Right. Now let's talk about some of the unique features of a home loan through United FCS. And I mean, are you somewhat limited as to who you can actually have as a customer too when it comes to home loans?
In a way we are. We kind of focus, as far as our portfolio loans, we kind of focus on a niche market, and that would be the rural areas. We can lend in towns smaller than 2,500 population. Because of our nature with assisting the farm industry, if the customer is a full-time farmer, we can look at second homes and so on in larger towns and that sort of thing. We also have an alliance or an arrangement with a secondary market lender. So if we have a potential customer who comes in and needs something that we can't deliver, for example, a home in Wilmer or something that we can't do the loan, we can originate the loan into the Freddie Mac secondary market. We have a company that we work with.
Okay. So that pretty much means, anybody could certainly be a candidate then to come in and talk anyways.
Absolutely. There's usually a way that we can help them.
Mm-hmm. And what are some of the, the things that are happening right now, some of the loans you're processing? What have been some of the more recent, what are people looking for? What are they buying, that type of thing?
That's a good question, Bill. I would say the refinance market is probably as low as it's been for a while because a lot of people already have refinanced into this lower interest rate environment. We're seeing quite an uptick in new construction. I'm seeing, in the rural area, possibly a farmer updating their home or building a home on a lake or something like that. We're also still seeing a fair amount of purchases. We have people who may work in like the Wilmer or the Litchfield area who wish to commute into work and they want to be out in the country. And that's kind of our specialty, is those rural residences. And we see a pretty steady inflow of that type of business.
Mm-hmm. That's very interesting. We've seen a lot of construction of like grain storage on farms. Well, maybe the last 10 years, it seems like there's been a boom of that. I mean, many of these larger operations have far more storage than, in the nearest town elevator has. Mm-hmm. I mean, it's just it's really amazing. How is that whole thing being financed as a rule? Is that something that you guys get involved with, or how do a lot of those things happen?
Well, that's another good question. Certainly, normally that's not handled in the consumer or the home loan department. It's usually either an agricultural loan, because obviously the purpose, it's all purpose driven. There's also the FSA, the Farm Service Agency, also does structure lending for like farm storage and can finance some of those. Sometimes what they'll do is they'll get a severance agreement. They'll finance the construction of the grain bin or the leg setup or whatever it might be, and then when that loan is paid off, that severance agreement is removed, and then if we do have a mortgage on the property, it again becomes part of the collateral. But we certainly have products to finance those structures.
Mm-hmm. Very interesting. What have you found the most interesting, Karissa, with working for United FCS?
I guess as far as the home loans, as I mentioned, that's a new field for me. But prior to that, I did mainly egg loans, even though I do both now. The home loans, it's just a different process, working with realtors and things like that we don't necessarily do on the egg side very often. And just a variety of people we get to meet that do different jobs, and just getting to learn about what they do for a living. Lots of different things that I didn't know you could do around here.
Mm-hmm. Yeah, that's interesting.
I think the biggest, challenge we've had is with the Dodd-Frank Act. There's something called the Consumer Finance Protection Bureau, and they impose quite a few new regulations and restrictions on the consumer lending industry. We're working with something called TRID now, which is basically the RESPA and Real Estate Standard Procedures Act integrated rule. And so it adds some challenges, some additional documentation, adds some time. It takes more time to get from a loan application to a closing now. So that's probably been the biggest challenge that we have right now. As we could become more and more familiar with it, we're getting better at it.
And some of that, I mean, I think the market was almost clamoring for, a little more regulation after what happened kind of in 08, 09. But many say that, what was actually finally adopted after it was either watered down or changed, maybe didn't even really hit at some of the biggest, culprits out there that caused some of these problems. I don't think it was the smaller lenders, really. I don't think that really were the main issue. And unfortunately, like you say, you've got a lot more paperwork and restrictions in place now that you didn't have before. So, our government is very obviously reactionary, and they see a problem and they react to it and try to fix it. Sometimes a broad stroke, though, doesn't always fix the problems that we have. So. Be that as it may, TRID is something that we have to work with, and we're getting better and better at it, and I hope that it helps the consumers in the end. You hear about being pre-qualified. I've heard that term before you even go out house hunting or whatever. Is that, is that something even that, you would advise if you're getting a loan through, United FCS, that kind of people come in and just meet and find out just what their maybe if their needs and their wherewithal to pay for it, if they coincide at all? Would you say that's something time well spent, I guess, to kind of find out where you really what you can afford?
Oh, I think it is, and actually you phrased that very well. We need to call it a pre-qualification rather than a pre-approval. If there's a particular property in mind that a customer wants to get approved for, you can't really do a pre-approval anymore because it triggers all the loan estimates and the TRID documents. But you can simply kind of do a broad stroke to give them an idea of what they would qualify for. Maybe some sort of a letter to them saying they could afford so much, and then they can go out into the real estate market, and they have a little leverage then as they're looking at properties and potentially making an offer on one. So I would say a pre-qualification versus a pre-approval.
Okay, well, that's good to know, I guess, the proper terminology there. And are you finding a lot of the buyers now are younger people then, or is it just, like you mentioned also, maybe they're moving off the farm, another generation is taking over and they're looking to build a retirement home, that type of thing? Or what is kind of the scope of the customers, I guess?
I think that's another good question, Bill. I would say our demographic is probably fairly diverse. We certainly get young people coming in. Always down payment is always a challenge for them, so we're looking at ways to assist them with that, whether it be an FSA or some type of help from FSA. The older crowd are probably looking for a second home. Or maybe they're building a new home on the farm place, and maybe the kids are moving into the farm place and they're buying the home. So I would say it's pretty general as far as the age group goes. I think we have a pretty diverse clientele.
Maybe somebody's going to have a winter home somewhere else, and again, could you come to assistance there? If what about crossing state lines, that type of thing?
We generally, for our portfolio loans, we generally stay away from that, just because with the new TRID rules and not being comfortable with the closers who are out of state who would be potentially closing it, the title insurance companies, the appraisers. I think we're probably at the point right now where we want to avoid most of that out-of-state type stuff. If we do have a full-time farmer who wishes to purchase a second home on a lake or something in Minnesota, by all means, we'll take a look at it. But we've been somewhat reluctant to get out of state with our portfolio loans.
Okay, well, that's interesting to know too. Anything else we haven't covered yet today in the last, say, 3 minutes or so we've got left here?
I'm happy to have Karissa on board here. I was actually getting to the point where I needed some help, and Karissa was doing the agricultural loans, and she had some interest in helping me with the consumer side, so she's actually wearing two hats now, and I think she's doing a great job. We had a discussion this morning about consumer versus ag loans, and certainly the consumer loans present more of a challenge with all of the documentation. But she's doing a great job, and I'm glad to have her working with me.
Well, great to meet you too, Karissa, and I hope you continue to enjoy what you're doing, and I know you're eager to help people. If they want to get a hold of you or Jan, is there a best number to call, or do you each have different numbers, or what should we give out here as far as?
We can give our 800 number out.
Okay.
It's 800-450-1771. And our website is...
UnitedFCS.com.
Yeah, that was an easy one to remember.
Easy.
And, a number of years ago now, you guys kind of took over some of the operation in Wisconsin. I know from a firm, because I was just through there and saw, a number of United FCS, facilities on right. I think it was Highway 8 we were on, or whatever it was. I can't remember all the towns, but kind of neat through there. There's a lot of dairy, and it's a nice area. So.
Yeah, we actually, that's another part of our association. Wausau is the kind of the central area, and I think some of the towns are Thorpe, Marshfield, Medford.
I remember going through a couple of those for sure. I know Thorpe, I remember.
Yeah. And it really diversifies our lending portfolio in that we have the dairy and the cranberries and the logging and that, and out here we're pretty intense cash grain, sugar beet type thing out here.
Right. Well, the crops, hopefully, for the most part, are looking great, and we just keep our fingers crossed and
absolutely
that the weather cooperates. That's still the big trump card, isn't it?
What
the weather is going to do. So, well, nice to meet you, Karissa. Thank you very much for coming in, and Jan, good to see you again, and best to you, and we'll see you again down the road. I suspect both of you, hopefully. So,
yeah, we'll look forward to it. Thank you, Bill.
All right. Thanks again. Have a great summer.
Thank you.